it's your first time here, feel free to ask any questions if you have anything to ask. And we are always here Wednesday, Thursdays, and Tuesdays as well. So Tuesday, Wednesday, and Thursday from 4 p.m. to 5 p.m. on Sydney time. Okay. For those who are here every single Tuesday, Wednesday, and Thursday, thank you so much. Black Zoda, Andre, Barry, and everyone else. So you already know the drill. Today's Wednesday, so today's going to be the Finlogix Market Sentiment Tool webinar. Usually, for those who it's first time, basically what it is we go through the Finlogix, that is a sister company from ACY Securities, sentiment tool. Basically shows where the majority of the market is positioned. So which side the market is positioned. Is it too long? Is it too short? And we just try to take the opposite scenario. Okay. The reason to take the opposite and not go with the majority, it's simple. A lot of the studies, and that's not unknown. I think everyone knows the risks, and that majority of the people that joined the market ended up losing money. So what we want to try to do is we want to try to do the opposite of those people. Okay, so when we have the market sentiment tool, we're basically trying to look at the other side of the scope and try to trade with the other side. Okay, so the minority, as of the majority, will be on the wrong move. And the minority will be on the correct move. So we just want to try to follow the minority. It's not always, but majority of the time, so I would say 75%, 65 to 75% is the win ratio for this strategy. I've separated a few pairs for today and specifically. So Euro Aussie, Pound Aussie, Aussie CAD, and Euro Yen. A bit focus on Australian dollar, I would say. Especially Australian dollar strength that is most likely going to be due soon. We are looking at some of those pairs being quite not showing the resilience of the strength. So we're going to be diving that in a second. So I guess in the next coming weeks or even coming days, we may be presenting some short opportunities on Euro Aussie, Pound Aussie, some long opportunities on Aussie CAD, and a few other topics, right? Euro Yen. Most likely, what we're going to be looking is short, but we're going to get that in a second. Perfect. So that's the Finlogix sentiment. Forex market sentiment tool. And how can I get access? Well, it's free. Okay. Yeah. We don't charge anything. It's publicly available. A lot of other platforms do charge, $100, $200 per month to have access to those types of features. But for us, we don't charge anything. All right. And the benefit is that you still have the Forex, you still have commodities, and you still have indices. All right. So majority of the other platforms available, they don't have all of the three asset classes. They only have Forex because it's the easiest one to get the data from, right? So as of we have the data from every class of asset class. So how do you get access to it? It's pretty simple. So you come to Google and then just type finlogix.com, and then that's the page you're going to end up. You have charting tools as well. So if you click on chart, the page is going to open is the chart page. Okay. And then you have tools. And then if you go into tools, you have economic calendar. So you can choose whatever country you want to have a look at the data. So let's say Australia, US, and Europe, and Japan. And I want the impact to be only medium and high. So there you have it. And you can select the recent and next. So recent means yesterday, today, tomorrow, this week, next month, this month, and next month. Okay. Or you can do your own search here. Very helpful, right? And then tools, you also got earning calendar. I don't trade stocks or indices or equities, so I'm not too much into, you know, earnings. But if you are, that's also here. But what we're looking for is market sentiment. So you click on market sentiment, and that's where you're going to end it up. Just it takes some time to load. And another thing that is good to mention. So right now is 4:14. Okay, so we're going to be updating that. Well, not we, but we're going to be able to see that updated in 30 seconds. Okay, so every 15 minutes it updates. All right, so we can see that Euro Aussie 4%, 19%, 31, 34, and 34. So 4, 19, 31, 34, 34. So let's see in 15 seconds what's going to update. But basically, it's this is a very strong indicative for if you want to trade this way. Just 5 seconds. 4, 3, 2, 1. Now. So 4, 19, 31, 34, 34. Okay, a few things change here, right here, as you can see. So Euro CHF jumped to 75% now long. It was 64 or 65, if I'm not wrong, and now it jumped all the way to 75. Okay, so pretty good. It's pretty much a live market data, right? And that's very important. Why? Because think about it. The market is a living organism. Right, it's not a static. When you're moving, right, when you're walking, we have the oxygen. We just can't see the oxygen, but the oxygen is there. It's a fact, right? No one can see. Oh no, the oxygen is not there. No, it's there, and that's it. When you're walking, you're dissipating that oxygen, right? And when you're breathing, you're inhaling oxygen and exhaling carbon dioxide, right? So, in a sense, you're changing all the molecules around you, and that's exactly the same with the market. At the same time that we have, let's just say, we have an entry price at $3.10, and you want to target $3.20. Soon as you hit buy, okay, so long right here, a long position, the market's going to go up. Soon as another player hits long, it's just fulfilling this move, okay, fulfilling the move. But then if we have a strike of prices, right, if we have someone coming and do a sell position bigger than these longs, what could potentially happen is pullback, or even, something like that, a full retracement that turns out to be a change of structure. So cool. So that's exactly the market, and having a living system organism that you can count on, and not a statistical, I would say, system, it's much more important, because once you have this, that it's updating every 15 minutes, you know what's happening, and you can look back of what just happened, and you can look now of what has just changed, and you can sort of predict what's going to happen in the future as well. So just a little bit of physics into market chaos. That's what a bit of the what I think it could happen. Everyone has different ideas, but that's my ideas. So for those who are asking, first time, there's not all the pairs here. Yes, because there's only the most relevant, the one that has the highest trade-off volume into the day. Okay, so people are more interested on trading these pairs than any others. If you come here tomorrow, some pair will maybe not be here anymore, or some pair will be existing. All right. So let's go first with Euro Aussie. So Euro Aussie, here we go. So let me go for the 4 hours, to the 1 hour. I don't know why this Zoom thing keeps popping up here. All right, cool. So we have a strong buy scenario. Okay. So there's only one thing that you guys, for those who have been here for a while, know already, is that once we have a less than 10%, okay, means that I will take the opposite. All right. Oops, sorry. Not here. It means that I will take the opposite of whatever it's telling me. Okay. Now, for what reason? If we look here, the longs have, this a 1 hour chart, and this is the 14th of May. All right. So pretty much 14 days ago. So if we look here, we sort of already had the move up. Okay. And what we can possibly be waiting for is a break of these lows and a retest somewhere around here and a continuation down. Okay. So that's exactly what I'm looking for. That's what I'm expecting at the moment. So I have a strong buy, but it's below 10%. So what I will be looking to do is I'm going to look to short. The next reason is, so we've missed on the uptrend. Okay, that's cool. That's fine. We don't want to chase that back again. What do we want to do now? Is get a mean reversion. Okay. So trading mean reversion it's good, but it can be risky, right? Sometimes. So the way we do these to be less risky, it's to be checking that sentiment tool every single day, at least 4 times a day. Okay. For what reason? Because any player, big player around the world, can just click and close the position and that tool will change. Right. And if that tool changes, then we need to be aware of what can potentially happen because someone just take profit or someone just, has no position anymore into the market. So in a sense, what those people are looking to do now, the long people, they're looking to take the longs out and start to build some short positions. And once that changes the opposite, then we're going to have a long, strong buy and we're going to have a strong sell, but we already positioned it, okay, above when everyone was thinking about it. We already did position, okay? Cool. Now that being said and explained, I'm looking to short Euro Aussie, okay? So let's just have a look here. So we have quite a retracement, sorry. We had quite a rejection at the level of 176, all right? So if I just plot here 176, we just have quite a rejection on that a couple of times. So we had 1, 2, 3, pretty much 10 times, let's say. Okay, so what a lot of people are probably seeing here is inverse head and shoulders. Okay, I think majority of people will be looking at like, okay, here there's a head and then a shoulder, shoulder head and then a shoulder. So when that breaks, what we're going to do is we're going to trade this up here. Well, I don't think that's going to happen, all right? And that's for sure. So what I will be looking to do is I'm going to look to short the market. It can be at market price, Euro Aussie. Don't have any target on mine. The first target I would look to is this one here at 175, around 175, 74,900. And once it breaks below these lows, then I would probably be placing my stop losses into break even. Okay. and just maybe 70-80% of the trade, I would cut that and then let the rest run. Okay. So just to finalize here, looking to short Euro Aussie. Okay. Next one is the pound Aussie. Same concept, but now we have above 19. Sorry, above 10. Sorry, just got distracted. So we got the GBP AUD. We have above 10. So that's a valid setup. But now is a big point. Okay, so let's go to GBP AUD. Loading. Okay, cool. So the GBP AUD has been going long for quite a while as well. So pretty much since beginning of May. Okay, and it has all pretty much retraced all of that move until today. But don't forget that we already have been pretty big on bullish market here. And I guess the market is on an extreme. And for that reason, I would be looking to short as well. I'm not too fan of longing, just because if you were to long, we missed a long here, okay? So what can potentially happen is that 9% will be de-escalated, and that's going to be opening positions for us to short the market quite soon. The best approach is, of course, 2.10. The best entry point, sorry, 2.10. Oh, bananas, there we go. So the best would be at 2.10. We quite did had that one before. And I'm looking to target maybe 2076 around these lows. And if it break those lows again, I'm looking to bring the stop loss to break even, and then on seeing break even, close 65% of the position and let the rest to run, okay? Because, yeah, we do have quite a big potential to go downside. Let me just do a few things here and take these off. There's too much things on this Fibonacci. Okay. Background. A bit more clean. So yeah, 61% is all the way at 2.12. But maybe it doesn't break that, but we can catch this reverse sort of pullback. And if it's not a pullback, then we're already positioned to continue to the market lower. If it's a pullback, then we can just close the shorts and open longs and monitor the market sentiment. Okay, so very important. Aussie dollar. Let's go for Aussie dollar. What it says long. Yeah, 33%. See, that's good. So that's way above 10%. So that's pretty good. Longing here, wouldn't mind. Okay. We can have a long position here, stop loss below those lows, and take profit above these highs. That would be quite good actually, in my opinion. Okay, so looking to long Australian dollar against the US dollar, especially if we look to US dollar index. I just grabbed it here. So if we look to the US dollar index, it's that's a 50-minute, but like just so a little bit more context, you guys look at the 4-hour. We have a pretty big down move, and for those people again believing that this is going to be the turnaround, the holy grail, the point that the US dollar is going to shoot up, I don't think so. Okay, so most likely continuation, breaking those lows, coming to 97. All right. And that opens a space as well to be looking to short US dollar Japanese yen. just with this pullback we had today. Maybe 145. Oh my gosh. Maybe 145 would be the best to be looking. Second. Oh, what's going on? Yeah, so 145, I guess, would be a good short to 138. All right. Anyways, coming back. So Aussie dollar strength, as I say in the beginning of the when I was showing the PowerPoint, I've mentioned I'm expecting some strength from Australian dollar, especially currencies against like euro, Canadian dollar, etc. So and US dollar, of course. So US dollar, as I say, I'm selling any bullish reversal sort of attempt that it's having. And it's mainly because of a lot of capital outflow from US is coming to Australia, it's coming to New Zealand, it's coming to Europe, coming to UK, Japan. So Australian dollar, Japanese yen. They can probably become a little bit more stable in the coming days. Okay. So, okay, it's loading again. Okay, look at here. See, as I say, GBP/AUD is just coming along. Okay, that 19 will become less than 10. GBP/USD just change it. So Aussie dollar was the top, and now GBP/USD is. So GBP/USD long. Let's have a look on that. GBP/USD is coming from a retracement a few days already. Since Monday, it had this shoot up move and then a pullback. Most likely we're coming at 113 or 113,200 around this area. But I'm not, I would say, yeah, 31%. Yeah, I wouldn't say it's bad to long, just because we had this pullback and that probably can be the continuation. But I would probably wait until the levels of 13,200. Okay, so maybe wouldn't place this position straight away into the market. And when the market comes back at this level, I would watch and check what the Finlogix market sentiment to is saying in that day. So, as I say, it's a living organism. It's not a static sort of statistical approach. No, it's a living organism. So every time you check, there will be something different because the market, it's a living organism, and because the market is us. Okay, it's me, it's you, it's a retail trader, it's a big bank. And I just want to, I don't want to be too harsh on that, but a lot of people say, oh, I don't want to trade because, especially the people that trade ICT, okay? I don't have anything against that. I just think that doesn't work. Someone didn't prove me, a track record of 2-3 years that it's working, the concept. And with an actual risk reward, with an actual Sharpe ratio, Sorrentino, and everything else. But lots of those people say that, oh yeah, the market's coming to trigger my stop loss. The market is coming to, the big banks are coming to stop me out and make me lose all the money. Stop. Just stop saying that, because that's not true. All right. It's a shame, to be honest, because you, like me and you, like retail traders, we're basically noise. Okay. The big banks like Citadel and everyone else, they have the strategies and they will be executing on their own, and that's it. Okay. They're looking for inefficiency in the market, maybe statistical arbitrage, or spread betting, etc. So it doesn't affect us, right? If you were wrong, just say you're wrong. don't try to put your fault into other people, because that's very, very ugly. Take the responsibility to yourself and make that sure that you are focusing on what matters. Oh, I'm very disciplined. I'm very focused. Well, but sometimes you focus on the wrong stuff. Sometimes you discipline it on the wrong stuff. It won't change anything if you focus it or discipline into ICT, into drawing lines, into not understanding the foundation of the markets, not understanding how real rates or implied volatility matters. Lots of people say, "Oh, price is, I've made a good profit because the market jumped from price 10 to price 11." Well, the price is just a number. It's just a number. Okay, it's just literally a way to understand how much someone's going to pay and how much someone's going to sell it for. But you had a yielding. Okay, so from the difference between price is yielding, and both of them work very closely together to be able to maintain a sophisticated market that we have at the moment. So it's just it's just some truth that maybe a few people need to listen to it. And don't mean this to anyone directly. I'm just mean to general for everyone. So coming back at pound dollar, I already mentioned that. US dollar, Japanese yen longs as well. So don't get fooled, as I say, don't get fooled with this pullback on Australia with the US dollar. Most likely, the market can probably continue to go higher, but I wouldn't go too much above 145. Okay, so if you want to long that, go for it, but be careful with 145. Most likely, what can happen once we get there, these positions will be shrinked already. Okay, so that will be below 10%. And if that's below 10%, we are on that treasury, on the threshold, that we look to do the opposite. So yeah, that can happen. That can probably go up to 145, maybe even 146, and then continue to tank. Okay. So next one, pound yen. Oh, wow. Yeah. So yen is very strong. Okay. Japanese yen is very strong. Overnight, we had a very big sum of short positions into the GDB 30 years, so the Japanese government bonds. I guess it's easier to do it this way. Bonds. There you go. Yeah. So we had a big sell-off of more than 90 basis points. So 11%, so 10%. And that is the reason why we had that weakness into the Japanese yen. But don't get fooled. As I say, the Japanese yen, it's very interesting to be looking to long. Okay. Another thing I want to teach everyone here is it doesn't make any sense if you have like longs pound Australian dollar, longs pound US dollar, and then you have a short pound yen. Okay. You pretty much killing one of those two positions. In what sense? It's basic, all right? It's literally basics. Once you have base and quote, all right? So you have, in this case, you have the base as the pound and you have the quote as Australian dollar, US dollar, yen. If you're looking to long the market, you're buying the base and you're selling the quote, okay? So your exposure into your MetaTrader account, into CTrader, whatever you use, will be that you are selling the pound and you are buying the other currency. And then you open a position that you're longing the pound and selling the other currency, It doesn't make any sense. You know what I mean? It doesn't add up. It's literally it's statistical. There's no negative chance. It's always a positive chance. So there's a positive chance that you have a $10 pocket, that $10 bill on your pocket, but there is a negative chance that you have a negative $10 into your pocket. So that doesn't make sense. Okay, so it's exactly the same here. I guess what we should be looking for is, if you're looking to long the pound, which is the weakest currency at the moment? Okay, so it could be the Australian dollar, it could be the New Zealand dollar. So if you want a long pound, then go and long GBP AUD, GBP NZD. I'm just giving an example here. And how you measure the strength of the currencies? Well, fundamentally, okay, look at rates, look at yields, look at bonds, look at macro views, etc. Pound, like a GDP, sorry, NFP, and all of the other combined ones. Okay, so going ahead, euro dollar neutral. So pretty much we don't do anything when it's neutral. I can't remember now, but we had another currency that was neutral once when we started. I think we had two. I can't remember which one was now. Cool. So moving on, euro pound sell. Euro pound. Okay. Yeah. So I guess that it's a 39% only short. But we have pound long, we have pound shorts already on here. So that doesn't make any sense because we would be looking to long the pound. Okay. So just a few tricks so you guys understand. It's not everything here is valid. Okay. Okay, I'm going to long this one. I'm going to follow exactly what the signal says. No need to. Sometimes we don't have setups. Okay. In this sense, we're betting into the weakness of the pound. So it would be much more smarter for us to long euro pound. Okay. But it's not quite there to even think about longs. It's 30% away. Okay. So we're just going to leave this one aside. Aussie yen. Oopsie. Wait a minute. I had a malfunction on my mouse. Which one was that? Sorry, Aussie yen. Aussie yen, there you go. Cool. And it's saying for us to short. That makes a bit more sense in a while. Because when we look at here, we have pound Aussie strong. We're looking to short it. So we're looking to buy Australian dollars. And then we have Aussie dollar longs that we're looking to long as well, Australian dollar. But once we have Aussie yen to short it, I wouldn't mind to do that, but it's just not what we're looking for, especially with the yen. Okay, what's going on with my mouse? It's not working properly. Interesting. Okay, it's the lights are on, but it's just not moving. Let me try to change the cable, guys. Just a second. Wait a minute. Oh gosh, my computer is dying. I need to ask for a new computer. Yeah. All right. I guess we have to. um, it sometimes it's going to work, sometimes it's not going to work, but I'm going to do my best to go quick as possible. We only have more 10 minutes. All right. So Aussie CAD, US dollar CAD. All right. Let's go here. US dollar CAD. All right. US dollar CAD is telling us to short. I would short, not maybe completely now. But the reason is we may continue to have some strength on the US dollar. Maybe we can short around these levels. So we use the past support to be a resistance. Okay, so the last resistance to be a resistance. So maybe at 38,600, 38,500 would be a good place to be looking to short US dollar CAD. Euro CHF. Oops, sorry. Euro CHF. Euro CHF is telling us to short. Well, that's a good option because the CHF is a safe haven. Okay, and what it can probably happen if we look here, we are up in the range, so we are above that range, and it probably can bounce back down at 93,200. So yeah, that kind of good. I would take that short as well. It just updated again, as you guys can see. Euro Aussie jumped from 9% to 4%. Pound Aussie jumped from, I don't know, it was like 20% now to 5%. So that's what I'm saying for everyone. Okay. New Zealand dollar against the US dollar. That's nothing here below. Aussie CAD. Yeah, I guess that's a good short in the USD, but maybe not at the moment, just because the US dollar strength. Yeah, we had the RBNZ this morning. RBNZ was quite a tricky one today. Market was widely expected that we had the 25 base points cut. Once we had the cut, the statement was a little bit more, I would say, dovish than what was expected. So, I reckon what we can expect from now on from the IBA is that the current context is the 25 base points cut was, as I say, priced in. And then the upward momentum that we just saw into the New Zealand dollar was driven by the statement that they had, because the RBNZ reframed from using overtly dovish language. And then once we have the minutes, it added some hawkishness tone, saying that the committee did discuss the option to hold the OCR at 350 or reducing to 325. So that basically shows us that there was a chance of no cut today. Okay, it's, as I say, it's just a chance because they already did cut. So that doesn't change much into or trading at the moment, but it's very important for us to for understand that yes, it does have impact. Okay, so hopefully everyone understands this. Cool bananas. Next one. Euro yen. Yeah, I guess Aussie CAD is going to be the last one for today. Yeah, so I'm looking to long Australian dollar against the Canadian dollar. I do expect Australian dollar to strengthen in the coming weeks. Okay, listen to me. I do expect Australian dollar to strengthen in the coming days. It's just that build up. It's just that all of the chaotic on the market it's it's looking very precise to do that, especially because the Australian economy continues to be quite strong. And that now the market prices another 3 cuts, but it's somewhat of a hawkishness cut. It's going to be quite interesting to see how that goes. All right, so looking to long Australian dollar against the Canadian dollar. Cool. All right, guys. I guess we come to an end of another webinar. Hopefully it was helpful for everyone. I always like to say some insights, but don't take that personal. It's just for general. I see a lot of things on my Instagram that it's just, wow, like lots of nonsense in terms of, okay, and hopefully I can just bring a little bit more of a light for everyone. Cool. So thank you all. Have a great rest of your day. I will be back tomorrow and we can have another chat. Otherwise, take care, guys, and I see you tomorrow, or I see you in the next video. Bye-bye.